All right, good afternoon, everybody. Let's go ahead and get started with the first day trading day of the year. It is January the 2nd, 2024. I'm going to be covering some of the same things that I covered on the broad market analysis, but we're going to start with CELH because this was one of the most positive things that happened today in the market. I mean, this thing was up 8% this year, or sorry, 8% today alone. So a solid $4.50 to the upside. And so I want to give you some levels to look at because the last thing that I want are for traders to come in and, have FOMO, if you will. So I don't want you guys to have any FOMO on this trade. And again, first day trading day of the year. And to me, it was actually pretty good. Not meaning like, did I make a lot of money or anything like that? My day trading was pretty solid. I did come into this year with a couple unrealized losing positions as of right now, but still have like 49 days. I chose to hold on to those just because of the fact that I had so long. So let me do a quick mic check before I continue here. We're having some audio issues, so I want to make sure that you guys can hear me. And if you can, give me a like on the video, and that might help out as well. All right, so it looks like everybody can hear me now. Again, I apologize for the mess up there. And let's come over here. And how are you guys doing? What's up? And let's go ahead and turn that baby off so you guys can see where I'm at. All right. So again, today I want to say this. I feel like I was kind of looking around, looking at X and looking in our room here at Simpler Trading and kind of trying to feel the vibe. And I feel like, man, I saw some crazy stuff. Not here in our room, but I saw some stuff out there on X where some traders came into the year really bullish, and I get that because we ended the year on such a high note, and you get a good rhythm and things feel good, and you're like, you know what, I'm going all in. And I heard some rumors of some people out there blowing their accounts today, which makes me really, really sad. And so when there's a name like CELH that I'm about to cover and it's up 8%, but the majority of the market wasn't looking so hot, the last thing that I want you to do is FOMO into a trade like this. So you'll notice on X, we got into this trade at 55.15 this morning. And it's up $4 from our entry and things look really good. But I want to show you a couple things to hopefully help you out. And before I keep going here, if you guys wouldn't mind giving me a like, go ahead and hit the like button. That just lets me know that the time that I'm taking out to give this information on YouTube is appreciated. And I hope that somewhere, I'm helping somebody, whether it's with your technical analysis or just in the way of thinking when it comes to trading. Now, when I look at CELH and I look up and to the left, I'm going to tell you there's an inside and down formation. The first thing I think about is when I want to look for supply zones, I look over and to the left and I see no formation here, which tells me most likely this is a Fibonacci level. So it's a psychological level. Okay. And so what we're going to do is we're going to anchor our fibs from the pivot high to the pivot low here. And the reason why we're not using any of this stuff is because none of this happened. All right. So we're just talking about, I'm giving you a little bit of introduction into maybe why prices dropped here. So I'm going to go up to the pivot high. I'm going to come down into this pivot low here. It doesn't have to be perfect. And it's exactly what I thought. It's the 618 or the golden Fibonacci. And the Fibonacci that I teach is that when we are downtrending, all right, and price moves up from demand, all right, price moves up. The 618 is really that golden Fibonacci level that says, hey, if we can't get over this and maintain price over that, then prices will go back down. So the downtrend is still intact. Now, if I take these same Fibonacci's, we're going to leave the high up here, and then we are going to move this anchor point to this pivot low, the most recent low down here. Okay. Notice that the 618 is pretty damn close to where we just had it. All right. So for tomorrow, if for some reason, right? Traders are like, oh, we're going to jump on this after an 8% day. I just want to make you aware. If we gap up into or around this level, be cautious. All right. I would expect to pull back. On a bull note, what I will say is because it's been tested so many times that it could be that we break through this. But at the end of the week, a really telltale that would be awesome would be if the weekly could close over this. But again, if we gap into it, I would be cautious. Now, I started my position today. This is a long term position for me, and in no ways am I telling you to buy it. What I'm telling you is just the technical analysis. Okay, so great day today, and all that could be gone tomorrow. You just never know in stock market, right? So technically speaking, we had this beautiful move up today, and tomorrow, and what I want to show you, let's call these Fibonacci's your primary, and then I'm going to go ahead and put a secondary Fibonacci level on here. Now, what I'm going to do from here is I'm going to place the level here, and I'm going to assume, or anticipate, I should say, that we could move up into my level. All right, so I click this here, and for anybody that may want to use technicals to help them stay in a trade, let's pretend that price has moved into the level. All right, I want to see the 38.2 hold, 57.91 tomorrow. All right, so again, if we hit that reject, I would expect buyers to show up around the 57.90 level. All right, so CELH looking great so far with our starter position. If anything, if we get up towards here, I might actually sell some calls against it. Okay, and because again, I'm expecting it to reject here. If we gap over it for some crazy reason and we're above it, I'm not doing anything. I'm going to let this baby go because we could be looking for a run to 64 to 66. Okay, let's go ahead and delete these. So again, just remember that support level I gave you. All right, really straightforward. Now let's talk about the ES futures because I think it's really important. As you all know, the ES futures and the NASDAQ are what help guide my portfolio. Meaning, if I'm bullish on ES and NASDAQ, then I'm looking to be long in the market. If I'm bearish, then I'm looking at being short or I'm staying long with some protection. All right. Now, in this case, if you watch the broad market analysis that I put out yesterday, very important that you do. It's still very, very relative to what we're doing right now. So go back and watch that if you didn't. But we were expecting sideways to down, and that's exactly what we got, okay? So I want to know, is there been any damage? And the idea, all right, and this is what happens in the stock market, is I don't want you to lose sight that we are going into earnings season. Matter of fact, some of those earnings start kicking off towards tomorrow, Thursday, and Friday, and then we got banks coming up. Now, I'm a huge advocate of not trying to get extremely biased during this time. Matter of fact, your fundamental traders, people who are looking for EBITDA, year-over-year growth, quarterly growth, and so forth, they're looking for numbers to kind of help give them the justification to say, hey, let's maintain this rally, or let's start to get a little bit more protective. Okay? And because of that, just my biggest thing that I want to teach you is don't get overly biased, just trade what you see. So after a big move like this and a small move back like this, no damage. All right. Some of the big names, sure, they're taking a hit. And I'm going to tell you, you're going to hear a lot of catalysts, a lot of news out there. They're going to find a reason, right? That's what these strategists get, right? They get paid to do this. Is they're going to give you reasons why the stock's down. Look at the market. All right. Don't be silly. The market's extended. It's pulling back. It's digesting. They're taking some of that away. All right. And then they use this catalyst and this news stuff to scare you when really technically it doesn't take a whole lot to understand that 9 weeks up, 1, 2, 3, 4, 5, 6, 7, 8, 9, that is the reason the market's pulling back. That's all you need to know. It happens over and over and over. So don't start feeding yourself with a bunch of noise and doing what 95% of other traders do is listen to everybody else, and then they start to get in their own head, and then it's really hard for you to pull the trigger. All right? So just know your levels. So when we talk about the weekly on the ES futures, and again, referencing broad market analysis from yesterday, I basically said this is support until proven otherwise. I don't care what happens on the 5-minute, the 4-hour, the 2-hour. What I care about is, does the weekly by Friday's close, do we stay above the support? And if we do, things look okay. All right. All right, let's go ahead and move on into the daily. We hit our resistance last week. We continue to pull back. The biggest thing I would say is that there's a possibility that we could still see down here towards 47.29 or 4,700. And that possibility, it shrinks if we can sustain a hold over 48.05. All right, so 48.05, then obviously if we were to take out this high up here, that would make a big difference. But for right now, we are in the cloud, and when we're in the cloud, we expect resistance. Okay. Next, where do we get the rally from? Well, that was from our daily blueprint that I'm going to show you here in a few minutes. Some positives to take away from this: the 4 hour, we have these bottom wicks here. That means bulls rushed in. They push price to the upside. And from a structural standpoint, this right now on the 4 hour is a mother candle, an inside candle, and an up candle. There's a possibility that this could move up towards that mark level that I'm talking about, around 48.05 to 48.08. For some reason, if we open up towards there, be cautious in the morning. All this right here is resistance. There's a lot of selling pressure there. We have supply there and so forth. Okay. All right. But that is the levels that we could see by the morning if we get a bounce. Okay. Let's go ahead and move on. Our daily blueprint, how did it do? It did absolutely amazing. It came down into the green and it moved up to target. It rejected at target, came down to the green, got a trendy turn signal, this yellow level right here. And I was long twice today in the ES futures. I'll go ahead and show you that. I went long here. Okay. The reason why I was a little late to the party, I was coaching and doing some other stuff, but we got above the cloud, and we also the momentum of the candle color change also gives me the confidence to go long or short. And then second time, I went long in here. To be very transparent, I went long here and I held on all the way to here, and then I closed for profits somewhere around here. Okay. So that's what I had on the ES futures. And again, we'll have a new blueprint going into tomorrow. But again, I can't make this stuff up, guys. Price moved down into demand. It pushed into my target to the upside, which was right here. And then it rejected. And then we got the trendy turn signal. It really is about patience. One thing that I want to say before I move on, the biggest levels are right here. All right. This is where I expect turns in the market. Far as the PMZ goes, the pre-market zone, this is fun to trade. It's really straightforward. Go long above, go short below. Understand your risk in the morning. It gives you a risk number here. That would be your stop. The lines are your targets. It is really straightforward, but this is where it's at. All right. Now, do they always work? Here's my thing. I don't want to perseverate on the fact when they don't work, because I show you so many times how many times these things do work. And even for me, guys, being transparent, I mess up as well. And sometimes I have a hard time even following my own blueprints. But I told myself a couple years ago, John, this is your process. You got to trust it. You got to take the trade. So I'd rather, because I understand, like when you look at this green box here, and again, I don't make up the green box. It comes from a structure. And I want to show you that really quick. So this came from a 2 hour. And I taught you guys this morning. So you may not see that. So if you're not a member here at Simpler Trading, you may not get the details, right? You just see the charts they come across, you're like, oh, cool, those worked out, right? But they're coming from structure over here. So I'm not just putting this on the chart and saying, hey, I think this looks good. This is based on structure. Now, I get it. When you first look at this, you're looking at it going, okay, well, if John were to get long at say 73 and he had a hold of 53, you're looking at 20 points or $1,000 a contract that I would lose out on 100%, right? But again, and I encourage you, go to my Twitter account, my X account, and look at all the times I post these and how often they work. All right. And so when they work, and they work a lot, they do well. When they don't work, again, I don't want to focus on the smaller probabilities, okay, or the lower probabilities is what I'm saying. All right. Now check this out while we're sitting here on the 2 hour. Just, I told you about 48.05, but there is a possibility that the 2 hour candle, or sorry, cloud is your resistance point tonight. So up here towards 90 to 92 could be resistance. All right, just want to make sure you're aware of that. All right, you can see the clouds working up here as well. All right, so that is the ES futures. Now let's go over here to the NASDAQ and see what happened in here. Was there any damage? This was definitely leading more to the downside. First of all, we see that it came into support. It's the same thing that I just coached you on the ES futures. I can't tell percent of people in the market are really thinking the same, and that's the easy way to take your money. You have to be different. So we came up with a different type of rule when it comes to stops, and it really helps us a lot. It may jive with you, maybe it doesn't. But when you're looking at the time frame here, all right, like I'm looking at the weekly, I have to basically give the respect of the structure that I find it on. That means for me, let's say that I go long here, long-term NASDAQ, somewhere here in this box. Well, again, the noobs will say, okay, well, his stop got hit. But we actually wait because a lot of times this will happen and it'll come right back up. And then what you get is you get a wick on this and you'll see that our levels work really, really well. Now, I get it. From a weekly perspective, that could be super dangerous. So really what I'm doing is monitoring the weekly, especially in a case like this where we're not coming into demand. This is just considered some support right here. Okay. Let's go ahead and move on. So no damage, but we do have a 9 EMA down here. It's possible. All right, let's move on. Over here on the daily, we hit the resistance last week. Again, these are the same charts from last week. We came into our long. That worked, I think, on Thursday or Friday, whatever last day it was, we were in here. And then today we came down to the next EMA, and now that EMA is working as well. But just like the last chart that I showed you, you could come up here and anchor the fibs here. And this 23 and 38.2 are going to be resistance until proven otherwise. So about 6750 and 6830. It is a relief bounce unless we start to get above that. Moving on over here on the 4-hour. This one was important because we had imbalances in the market. We actually had a level, and I'll show you that real quick. I'm going to go over here to our intraday chart that we actually used today. All right, and there it is. So this was the imbalance that I gave in the room today, 16626, and this is the green box. So this is a great example of the green box not working, and it's very rare. I mean, honestly, it is, and our members will tell you that, or whoever follows me out here. It's very rare that I get the charts not working. You saw that the ES worked really well, but the NASDAQ, it led to the downside, but it wanted imbalance. And you may be asking yourself, well, what's imbalance? So I started off with the morning saying that, and actually we talked about this in the broad market yesterday, so you should have listened there. This had already been tested, and I said, hey, listen, this means that when it's not fresh, we could break through, and that's exactly what happened over here. We break through and we came to the imbalance. So when I say imbalance, what I mean is that prices move so quickly to the upside, the orders that in here that were sitting there were not completely filled. So what happens, price moves too quickly, and when it runs out of buyers, it comes back to imbalance to fill the unfilled orders, then price moves back up, and here we come back to here to this imbalance, a little deeper in the imbalance, if you will, and then it worked. So what do we have on the 4-hour? We have a nice little hammer, all right, but on this particular structure for today, and let's take this out of here. I'll probably end up moving this somewhere down here. We'll use the trendy edges, but let's take this off actually and kind of talk about it while we're sitting here. Okay, we'll move that over there. These are just, a lot of people ask me what these are. These are just Fibonacci arcs, but we use them as targets. So I just color them so that people understand where my targets for the day are. Okay, so when we look at it this way, again, there's a lot of divergence between the candle and the cloud. That cloud has resistance until proven otherwise. Okay, remember, you can use the Fibonacci's that I just showed you on the previous screen, or you can look at the divergence, look at the support, and if we hold support, then overall we're looking for a move back up towards the mean, up here towards the cloud. Okay, so again, the easier way, in my opinion, you just come up here, and we went over this today, you can pick this as an anchor, or you can pick this. It just kind of depends on how long you want to stay in the trade. We'd come over here, go right there, and 23.6 and the 38.2 are going to be your resistance on this particular setup. Okay. All right, so that was that, and we come over to 5-minute, the intraday. Okay, so here's the 5-minute chart. All right, or sorry, the 2-hour chart, and let's go into the 5-minute so you can kind of see how things worked out today using a 5-minute chart. All right, so we teach go long above the PMZ, go short below. Well, we had already opened. Okay, once we broke down below, I know that we had traders go short. Awesome, you got paid. Most likely you covered kind of quick. It came up. You're like, ooh, oh, that's awesome. I gave you a video specifically on how to short the market when we open up down. And I hope it really helped you. I cannot make this up. If you listen to it, if you watch the 6-minute video before you opened up, you would have been ready for this. I said every time you come into this cloud, draw 2 lines here. Look at this as a zone. This is where you go short. Boom. It worked over and over and over until it doesn't. Don't be the person that watches the strategy work. 1, okay, 2, 3, and I could probably say more than that. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Don't be the person that tries to take the trade on the 16th try. And believe me, there's many people out there who watch, and then when they get the courage, they just happen to pick when it's already too late. All right? So just something to think about. The trendy turn signals obviously work when they do, and when they don't, they don't. But, you're underneath the cloud. All right? And so these things worked out really nicely. There weren't too many of them today. Things look pretty good. As far as going into tomorrow, I'll make some new charts and post those for you guys, okay? So that is looking good as well. What else did we want to cover? So SPY and QQQ. Let's go ahead and pull that up. I gave you guys the neutral strategy. Here we are. So the neutral strategy, I had a great question. I want to cover that. Somebody said, hey, John, what happens if we already open up underneath the level? So that's really straightforward. If you open up underneath the level, let's say that you opened up down here at 471. Remember what I said in the broad market analysis? I specifically said, look for buyers right here. Buyers did step in. Notice that price went up. Okay. We do not short when the market opens at a level. We look for a bounce. Okay. Just like if we were to gap up and hit this level, we're looking for a short, or we're looking to trim some of our longs. Okay. Every level to the downside is support. Every level to the upside is resistance. Okay. With the market being up 9 weeks, where overall sentiment from trendy was sideways to down. Okay. But we do not want to be shorting on the lows. Short when the market goes up and hits your resistance. It's a better look. It's a better risk to reward. It feels awkward, but you got to try it. Over here on the QQQ, same thing. We gap down. We flushed the third target. And like I said, if you guys need more targets, we'll do that right now. So if we continue down, we're going to use this trendy edge right here for tomorrow. And if that breaks, we could see moves all the way down to 397 to 395. So we'll add those two in there. So add that 397.85 and 395.61. But if we happen to hold, all you have to do, let's just say we gap down a little bit more tomorrow, but we don't take out the 400. This is your support, and this cloud up here is going to be your resistance. Okay, so again, that's your SPY and QQQ neutral. Now let's go ahead and pull up. Let's pull this in here. We're going to look at the dollar and the TNX. Remember what I said? I haven't even looked at them today. I said the dollar was at a place where it could bounce, and I said the TNX, the 10-year treasury, we were looking for it to bounce, and I gave all these warning signs for a move down today. So let's pull up the DXY, which is the dollar, and it's exactly what happened. At this point, it looks like we could see 100.45 as long as price stays under the cloud. Price bounced at the inside and up. Resistance at 102.13. We're at 102.22. Then we have resistance at the next Fibonacci levels, 103.082 and up here towards 104.61. And really, I wouldn't be concerned about this pullback unless we were to get above the 618. All right. If we continue down tomorrow and you're like, damn it, I tried to buy the dip, it's not working. Just remember, these things are really synergistic. Like if you just watch this, most likely what happens if we do continue up, people start to get really fearful on day 2 down. But right in here is where I'd expect the market to then pull back probably into Wednesday, Thursday, and then we get some kind of nice bounce. Okay. So that's what I'm looking at in the dollar. Same thing. The inside and up is working, and we did go bid, and it started to move up, and of course everybody starts freaking out. Let's go ahead and talk about the TNX really quick. The 10-year Treasury, same thing. So it looks like TNX did the same thing. It went up, and believe me, if I was in the world of pushing news out, right? I was on a big television channel. This would be like a prime example. You could use the strategy and be like, okay, now I'm going to release some fear. I'm going to release fear because I understand that this level should push prices up. All right, and the TNX would rise. It's a great time for me to release an article and scare the bejesus out of people. It's crazy. All right, just watch the technicals. Ignore people and news and all that stuff like that, okay? All right, so they did both bounce, all right? And the ES and NASDAQ were 9 weeks up. Now let's talk about, and I didn't even mess around with semiconductors, so this is like off the cuff as well. We're going to minimize this. Let's go into SMH, right? Let's talk about like AMD, NVIDIA, all that stuff. But in order for me to get a good feeling, I need to understand what the semiconductor ETF is doing. All right, so I'm going to come down here. I'm going to take a look. And yeah, 1, 2, 3, 2 weeks of digestion. 1, 2 up, week of digestion. And here we are right here. So down 590. All right, and aftermarket, you can see it's up just a tad. All it did, and I talked about this with the trendy members, if you have the trendy indicators, we started to move up, and I said look for the pullback into your upper YE, which is exactly what the semiconductor did. It came into what support. The way that we want to use the trendy edges going into this year for semiconductors is that anytime that we pass this yearly edge, okay, and we move up, and you notice that we have the new yearly edge, we look for prices to come back here and then test this level, okay? And then we'll find out from here, it'll probably, I would imagine, relief bounce, maybe a pullback into the 9. So it's close, right? So we could put a line, say about right in here, 163. And in this area within here, and I just put one little line there for support, it's actually like a zone, if you will. I would expect buyers to step in here and try to hold, all right? But most likely it comes in the fashion of, what's the rest of the market want to do? And we'll find that out towards the end of January, okay? Or probably the better half of January, right, is what I'm looking for. But you never know. The market is going to do weird things. Like they could have really scared a lot of people out of their positions today, and then tomorrow could bring it all right back, and you're like, what in the hell just happened? The thing is, technically speaking, you have yourself a process, and that's what I'm here to teach you. We find you these zones. We tell you how to enter them. We tell you where good targets are if you ever want to trim and so forth. Okay. Anyway, semiconductor, this is the area I would expect it to hold this week. Therefore, when I come over to anything else like AMD, let's take a quick look. Let's go ahead and clear the drawing set here. All right. So this one pushed up through the trendy edge, came back, broke down below. And the first thing I think is this level here to this. We're gonna push it up to about right here, this 9 EMA. Notice that the 9 EMA, okay, is starting to flatten out just a tad, and that's after today. And most likely we might get a little bit of a pump tomorrow, right? But this is going to be resistance. This blue level is now your resistance, okay? So this blue level and this level are your support, 141 by 133, okay? So somewhere in here, I would expect buyers to show up in here. However, if I'm wrong, follow the dots, look for your next demand zone, and that's going to be in the fashion right there, which to me, if I get the opportunity to buy here, I'm going to be really happy. And I'm sorry for anybody that might have held. It's just the first day of the year. Like, don't freak out. If you're in equity, like in your thought was long term, I always think long term with equity is a scale in type of process. Like, don't ever think you're going to be right. I think you set yourself up for the wrong expectation. Like, I have a good process and I have good levels, but I'm not going to be right. That's how I think, right? And if I approach trading that way, then I think long term scale in. So example, I scale in somewhere between 131 and 1 or 133 and 141. All right. And let's say that my overall allocation, I want to be 20K in. All right, whatever 20K will buy me. And my starter, though, when I scale in, is going to be like 5,000. Okay, so 5K, and again, I'm not a financial advisor. This is just how I approach things. 5K would be starter. So whatever 5K can buy me with 138 bucks, that's what I'm doing. I'm starting here. So I could do 5K here, and if I'm wrong, I'm going to do 5K in this zone at 122. And then I'm going to do 5K. I'll probably use some Fibonacci's, measure some stuff like this right here. All right. And then, maybe I do a 5K at the 618 because again, this is an uptrend and using the 618 is the golden fib. And if I'm wrong and I take some heat on this for a while, then I should be right around here. All right. And then I start to trim out of my position and then hold some. So you trade around your core position, right? You get to your core of 20,000 and then you trim out some of those 5,000s that you were adding on the way back once we get past those levels. So that's the way I like to approach it. Again, that's just me. That's how I like to look at the levels. Okay. Next thing, let me just make sure I had, let's go over here. Trying to think this out loud. Let's look at Apple. I heard that Apple. I wasn't in Apple, but this is the this is pretty cool actually. Check this out. So this was my alert that I sent out, and I kind of after I pushed this out, I was thinking to myself, yeah, I should probably take this right now. So let's go over here. Yeah. Apple on watch now until Wednesday. Check this out. This is where Apple was. It pulled back. Looking to sell put credit spreads in here. Boom. This is the results, right? Right there. And you could have made money immediately, just on that push to the upside. Again, what am I using here? I'm using a demand zone that I found in the market. I want to say, let's see, it wasn't a quarterly. I think it was this weekly right here. Yeah, it was a weekly zone. Sorry, a daily zone. I apologize. A daily zone, and it worked out well. Same thing that I showed you on ES and NASDAQ. It's a relief bounce until proven otherwise. If it can't get back over the 618 or over these colored levels right here, then it's sideways, relief bounce, and then sideways to back down. Okay? So that overall is my whole thing about today. Again, I just want to make sure that if you're having a hard time out there, or if you felt like today was just one of those days where you're like, damn, man, I was really set up. I felt like, hey, I wanted to, you know, do really well and you let yourself down somehow, just ask yourself, like, were you following your rules? Were you following your allocation rules? Like, those things are more important than having a down day. Like, who cares if you have a down day? Like, if you came into trading thinking that you weren't going to lose money, you are not in the right business. You will lose money. You will not have all winning trades. And we as traders, we grow very thick skin because we realize that we don't perseverate on the lower probabilities, right? Don't put yourself in that weird position. Think about all the times you can do well and you have done well, and just rely on those to keep you going forward. All right. Anyways, I really appreciate you guys. Don't forget to hit the like, and we appreciate you. Thank you so much for a wonderful day, and see you soon.